Been following the New York real estate market during the past year, or even during the past few months, you may find the changes a bit confusing. Well, the report on the first quarter of our new year is now out, and real estate experts say, bottom line here, people are back out, they are looking, and they're even buying. So what does that mean for you? We're joined by Darius Solomon, associate broker with Prudential Douglas Elliman. Darius, it's always great to see you.
Always a pleasure.
Okay, so this first quarter report is out. Overall, what does it say?
Well, we've seen that we're moving back into an active market. We've had a confusing few quarters leading into this one, where we saw a slowdown, a buyer's market, somewhere in between. And now we've come to the point where we've actually seen, from last year, the same time, first quarter of this year, we've seen in co-ops have actually moved up about 3.6%. Not massive changes, and condos took about a 2% decrease, but the market is active again.
Okay, the market's active. Very interesting price differences between the co-op market and the condo market, and then even the differences in the size of the places. So we're going to look at co-ops first and look at some of the average prices. And look here, Darius, it's very interesting. We have studio 1-bedroom, 2-bedroom. So the studio 365 down 8.5% from the previous quarter. So that's just from October through December of last year. And then the 1-bedroom here, another steep decrease, almost 6%, yet the 2-bedroom is up 5%. Up
5%. And we're going to see, oftentimes, we're going to see shifts, within each of the markets. The luxury market was fairly strong. We saw bonuses come in, and that affected some of the luxury market and the 2-bedroom market as well. Now, it's also important to note that, there are shifts in buying patterns. And with studios, it makes a slightly smaller price difference will make a larger change in the percentage. So you can't look at that too closely, but most important is the fact that the overall numbers are changing.
Let's take a look at the condo market, because there we see some differences here. We're going to look at prices now for condos. Once again, studio 1-bedroom and 2-bedroom. The studio there about $574, and you see up there 5%, and as you point out, small changes get reflected in that one. The 1-bedrooms basically static, just down about 1%. And then the 2-bedrooms, Darius, we've seen a considerable decrease there, 10% from the previous quarter to $1,007,000. What's up there?
There could have been shifts. We saw a lot of new development prices come in, a lot of new developments closing on, ones that were built over the past 2 years, people closing on those properties over the fourth quarter and to the first quarter. So those tend to range on the high side of the average, and again, there are a lot of existing condominiums that are on the market which are still being purchased actively. So again, we'll see shifts from the new developments, which tend to be a little bit on the higher side, and some of the existing, which are a little bit lower. What's important to also look at is the inventory, the shifts in how the inventory is changing as well. And also, we've gone to about 5,900 in inventory units on the market for this quarter. It's important to know that's about a 14% decrease from last year, but only a 0.2% from the last quarter. But inventory is slowly eroding from the fourth quarter, where we saw this increase, and it's coming to the point now where that's starting to be used up by the buyers outside.
Okay, so let me ask you this question. Is it a better time now to be a buyer or a seller?
It's really in between. We came out of the fourth quarter. Well, it is, because good properties are selling quickly. Overpriced properties can sit much longer. So for the buyer, again, we've always said, if you're looking long-term, interest rates are remaining low. As we look forward, inventory is a little bit lower. There is more activity. We are on the real world seeing some multiple offer scenarios, but it's still a good time because interest rates are low, and if you're looking in the long term, it's a good time to buy, especially compared to the series of years we came off in 2004 and 2005.
All right, well, Darius, very interesting to see those price changes. We appreciate you dropping by, as always. Thanks for joining us.
Always.